All right, let's talk about corporate earnings reports. Those documents that can send stock prices soaring or tumbling. They can seem super dense and honestly a little intimidating, but today we're going to crack one open and show you the story inside, using US Bancorp's latest results as our guide. Let's do this. You've seen the headlines, right? Some company beats earnings and the stock pops, or they miss and it drops. But what does that actually mean? What are they beating? And is that really the whole story? Well, that's exactly what we're going to get into. Because here's the secret. Behind every number, every percentage, every forecast, there's a story. A story about how healthy a company is, what its strategy is, and where it's headed. Our goal today is to give you the keys to unlock that story for yourself. So, first things first. What's the best way to even think about one of these reports? Simple. Just think of it like a company's quarterly report card. It's their chance to tell the world, and especially their investors, here's how we did. Yeah, officially, it's a required public document filled with financial statements. But at its heart, it really is a performance review. It covers how much money they made, how much they sold, and what they think is coming next, all graded against what everyone expected them to do. Okay, enough theory. Let's get to our case study, US Bancorp's fourth quarter results for 2025. Time to open up that report card and see what kind of grades they pulled. First up, let's look at the expectations. Before the report even came out, the analysts on Wall Street, the people who follow this company for a living, all got together and basically said, we predict US Bancorp will earn $1.19 for every share of its stock. This number is the benchmark. It's the grade they were supposed to get. And here's the actual result, $1.26 per share. They didn't just meet expectations, they sailed right past them. This right here, this comparison, is always the first thing everyone looks for. In Wall Street jargon, this is what's known as a beat. It's a thumbs up, a sign the company did better than all the experts thought it would. But, and this is a big but, a great analysis never, ever stops here. We gotta dig deeper. This little table gives us so much more context. So look at that top line. We already know they beat the profit number. Now look at the second line. They also crushed revenue expectations by more than $600 million. And maybe just as important, check out that last column. Both profits and revenues are way up from this time last year. This wasn't just a beat, it was a signal of some seriously strong growth. And hey, you don't have to take my word for it. Here's a quote from US Bancorp's CEO, Gunjan Kedia. She mentioned something called positive operating leverage. We'll unpack that in a sec, and says it was driven by record revenue. This is the company's leadership basically telling you the business is absolutely firing on all cylinders. Okay, so they got an A+ on their report card. We know that. Now, for the most important question of all, how did they do it? Because beating the numbers is one thing, but understanding the story behind how they did it tells you if that success can actually last. A huge piece of the puzzle is right here on this chart. Take a look at their revenue mix. A massive chunk, 42%, comes from fees, not from just making loans. We're talking about things like payment processing and managing wealth. This kind of diversity means they aren't totally dependent on what interest rates are doing. And the CEO says it herself. This is no accident. She calls this mix a core differentiator. In other words, this is a deliberate strategy to build a stronger, more resilient business. And, well, this quarter, it clearly paid off. Now for the other half of this powerful story. They didn't just grow their revenue. They paired that growth with some incredible discipline on their spending. The report points out that their expenses have been pretty much flat for more than 2 years. That's amazing. And when you combine those two things, revenue growing way faster than costs, you get that powerful engine the CEO mentioned, positive operating leverage. It's like the magic formula for making a business more profitable. They delivered 440 basis points of it, which is just a fancy way of saying 4.4%. For an investor, seeing this is a huge green flag. It tells you the business is efficient and built to scale. But, an earnings report isn't just a look in the rearview mirror. It's also a roadmap for the future. Companies use these moments to tell you about their big strategic plans, and US Bank definitely had some big news to share. The big headline here is their plan to buy a firm called BTIG. Now, this is a major move. It's all about beefing up their investment banking arm, a clear sign that they're pushing into new areas to serve their biggest clients. So why does this deal matter so much? Well, 1, it lets them offer more services to their corporate clients. 2, it makes those relationships even stronger and stickier. And 3, Look at this number. They expect this deal to bring in up to $200 million in fee revenue every single quarter. That's a massive bet on future growth. And they're not just buying other companies, they're also getting ready for the future of finance itself. The report mentions a successful pilot program for things like digital assets and stablecoins. This shows they aren't just waiting around for the future to happen, they're out there trying to build it. Okay, we've gone deep on the company. Now, let's zoom out. A giant bank like US Bancorp is so connected to the entire economy that its report card is kind of like a report card for all of us. So, what clues does it give us about the big picture? Well, the signals here are surprisingly positive. People are saving money, consumer deposits actually hit a record. Businesses and people are borrowing more, which shows they're feeling confident. And, maybe most importantly, fewer people are falling behind on their loans. These are all signs that the average person and business are doing okay. But of course, a good analysis always looks for the potential risks. No company report is ever all sunshine and rainbows. So, what potential problems did the management team make sure to point out to investors? Management pointed to a few key things they're keeping a close eye on. There's some uncertainty about new banking regulations, some talk in Washington about capping credit card rates, and the simple fact that the rules for digital assets are still being written. These are all things outside their control that could affect the business down the road. So here's the big takeaway. An earnings report is so much more than just a pass or fail grade. It's a narrative. It's a story about strategy, about discipline, and about ambition. It's a window into the health of a company and even the economy. So now that you know what to look for, the next time a company reports earnings, you can look right past the headlines and find the real story for yourself.